Hi, everyone. Thank you for joining today at lunch. Can you all just quickly hear me? Can you hear what I'm saying? And if not, yeah, give me a shout out. Okay, cool. Very energized lunch today. Thank you all for joining today, taking the time out of your day. I'm Kareem from Expat Republic. And as some of you may know, we are a media company in the Netherlands, English speaking media company. And so basically what we do is we help expats with all kinds of articles, all kinds of events. Life is not always easy moving abroad, but from my experience, it's been really awesome in the Netherlands. So good to all have you here. And so, yeah, just a few house rules for today. We're going to be just a couple. Actually, let me tell you a little bit about what we're going to talk about today. One of the things that that happens a lot is a lot of expats come to the Netherlands and so the housing issue, looking for a house and stuff, becomes a little bit of a challenge. And then people find their house, they're super happy, and then they say, you know what, I've got to leave, or I've got to, I've got to move abroad, or, I'm looking for another investment opportunity. And so the idea becomes super interesting to say, hey, why don't I buy an investment property or maybe rent out the property I have? And so that's really great to do that. It has a lot of advantages. It's not always easy, but today we have some awesome speakers and some experts today from Mr. Mortgage and Expat Letting Network, sorry. Expat Housing Network also exists for your first home, but for renting out your property, you have the lovely folks at Expat Letting Network and Mr. Mortgage. Their whole team is here. It's really, both are awesome companies. They're here to help expats. They really have the kindness and the experience as well to help. So I do advise you to ask the questions. A little bit of house rules today. If we could ask you to switch off your mics, you're free to keep the camera on, and all your questions, put them in the chat, and we're definitely going to ask them at the end. I think that's about it. I'm going to hand it over to the wonderful folks, our experts today, and yeah, we're ready to get started.
Thanks, Karim, for your lovely introduction and hosting this wonderful event. This lunchtime event, indeed. Now, you don't necessarily, indeed, it's perfectly fine to stay muted. You can enjoy your sandwich, your lunch, your pokeball, or whatever you're enjoying now. By all means, do. And if you have any questions, indeed, let's discuss them at the end. Maybe we'll answer all of your questions during the presentation anyway. So we're here to discuss the buy-to-let options and how to invest or rent out your current property. Let me first discuss a bit about what we do, what Mr. Mortgage does, what the Expat Letting Network does, and we'll obviously introduce ourselves a bit as well. So let's crack on. So what we'll discuss today is basically Mr. Mortgage, how we can help you finance and get an understanding of your buy-to-let and refinancing or keep-to-let options. That's basically what we do. We guide you through the whole house hunting process and or refinancing process, depending on what your personal situation is and what you really need in this situation as well. Most importantly, first, get insight, know what the options are. Don't necessarily only get pushed towards a certain direction, because that's just what everybody does. Look into your personal options and situation to see what makes the most sense. That's basically what we do in a nutshell. And maybe Diovana, you can expand a bit about what Expat Letting Network does in this in short.
Sure, yes. Hi, everyone. Thank you for being here. So let's explain a little bit about what we do. So our company helps expats to let their properties in the Netherlands. We work all across the country. We have different people living around the Netherlands that can help you out letting the property, find the perfect tenant, make sure that that your house is well listed out there, that everything is actually correct to be able to rent, that you have everything that is necessary to be able to rent your property, and of course that all the rules apply for your rental property as well, right? So that you are indeed according with all the laws that the requirements that are out there to be able to rent it out your property. And as I said before, to find the correct family, correct tenant, correct person for your property that can take care of your property like they would take care of their own home. So that's our biggest goal, I believe.
Thanks for the introduction, and we'll be more specific about this later on during the presentation anyway. But thanks for this introduction. Let's get to know a bit about the people that we are actually giving this presentation today. This is the Mr. Mortgage team, and we're Bill Cesar, myself, Robin. I grew a beard in the meantime. My lovely colleague Egle, who you'll meet later on with the Q&A. And the last mortgage wizard, if you will, Özkan. He's kind of a mortgage Google. If you want to know anything, then he's there to always back that up. So that's basically our team. Every one of us has experience with either living abroad or being raised in areas where there was a lot of different nationalities. That's me, basically born and raised in Amsterdam. Always very much liked the different stories that everybody had, different nationalities, different cultures. There's a lot to learn there, and specifically with expats and internationals, like undoubtedly yourself. I think everybody has their own story, and it's very adventurous in any case, because you move to somewhere to build a life here. That's a very nice group of people I like working with, to find out, to kind of guide you through the kind of a maze that it can be of finance, of mortgages, what to do when you buy a house, and also when you want to buy a next house or invest in real estate. It doesn't have to be that daunting, but it's just good to know what you're up against and what you have to consider here. So that's what we all very much love doing here. So we're very excited to guide you in this process as our team. Now, obviously, our services are surrounding the first-time home buyers. So when you, as mentioned, when you move to the Netherlands, you want to find your first home to live in, first get an understanding of what your options are, see what range you can look into, and then we'll also help you get an understanding of who you're working with. For instance, the friends of Expat Letting Network, Expat Housing Network, are also people that we very much enjoy working together with. Same goes for refinancing. This means that you want to maybe rent out your current house, so you have to change it to an investment mortgage. Or if you don't like your current interest rate, you want to adjust that. Also when you want to buy your second house, or buy to let, of course, and when life takes a turn and you might divorce, and what happens then with your financial situation and your mortgage more specifically. Basically, everything surrounding your mortgage, we can help you out with. So that's basically our service. We'll start with an introductory call, then dive into your financial possibilities through financial analysis to get a clear idea, and then we'll guide you through the whole house hunting process until you have the keys in your hand and you're a proud new homeowner. So that's in a nutshell what we do. Now, if you want to schedule a call, we'll discuss a lot of things. If you have any questions, again, in the Q&A, you can discuss that. If there's anything particular to your specific situation, feel free to schedule a call with us. You can use the QR code, and that will be later on stated again, or visit our website and schedule a call, and then we'll just basically answer any questions you might have. That all being said, I'm not alone here, of course. I'm joined by the lovely people of Expat Letting Network, and feel free to introduce yourselves as well.
Hi again then. So I'm Diovana. I am a letting consultant. I'm also a buying and rental consultant. We are Expat Letting Network, but we are also Expat Housing Network. So we also have clients that we help with buying a house and renting a property, and then afterwards we help a lot of people renting out their properties. So I'm Diovana, as I said before, I'm here. I'm from Brazil. I've been in the Netherlands for about 14 years, I believe now. It's been a long time. I think I kind of lost count of the years. I'm here in Eindhoven. I am responsible for the whole south area of the Netherlands. I think I will pass to my colleague, Lilet.
Hi, my name is Lilet. I am a letting consultant for Expat Letting Network. I actually started with Expat Housing Network. Just to be confusing, it's actually our sister company. I used to help and support expats who are moving into the Netherlands find a home. So it was a really valuable experience because I got to have an insight and different perspective from a tenant's perspective. And so now it really helps being a letting consultant now that I help landlords find a home, and I'm in charge of the Amsterdam area. A little bit about our service. We provide two services. We provide tenancy placement and property management. Finding a great tenant for us starts with caring about the process and the property. And the key element is obviously to provide the landlord with a great experience, but not just the landlord, but also for the tenant. We believe that the tenant, when they feel instantly at home, they will treat the property as if it was their own. We work with a huge network of professionals from reputable companies. As you guys have heard, that we are also Expat Housing, which helps a lot of expats moving into the country. We provide continuous support even after the tenant receives their keys, because we believe that's kind of really just as important as finding the right tenant for your property. We work in Amsterdam, Groningen, The Hague, Eindhoven, and Rotterdam.
Very good. That's about getting to know us. Let's dive into the nitty-gritty, into the actual things that you joined us for. To begin with, I cannot stress this enough, but a buy-to-let mortgage is not the same as a residential mortgage. There's some differences to consider right there. Now, to give you kind of an idea of what a buy-to-let mortgage is, it's basically a mortgage that is a type of mortgage that's specifically designed to finance property to rent out to a tenant. What this means, a residential mortgage, that's the mortgage that you use to buy your home with, that you live in yourself, so your own home. Residential mortgage lenders or banks will not allow you to rent out your property as a whole. They don't do that. So you need a buy-to-let mortgage. So just to get things out of the way, the different terms might be used in different ways. Just know a buy-to-let mortgage, a keep-to-let mortgage, and an investment mortgage, pretty much the same thing. It's just different ways to get into that mortgage. So a buy-to-let mortgage, investment mortgage, is all the same thing. It's a mortgage to finance a property where you rent out the entire house. This doesn't include renting out a room in your house. This is usually an option when you just have a residential mortgage. That's okay. So it's not about a single room, but your entire house, basically. Moving forward. So where would you start? Basically, there are three questions to ask yourself. Why, what, and how? Before we dive into this, Karim, could you start up the poll? Because we have a couple of questions to kind of get an understanding of what your situation is. So what would you like to achieve? Would you like to generate passive income, build wealth, or diversifying your investment portfolio? They might come across as pretty similar. You can fill it out whenever you're ready. I'll give you some time to fill it out. They're quite similar, but there are different considerations there. Building wealth, that is expanding your wealth, which you already might have, and diversifying your investment portfolio more has something to do where you already have different investments. It might be real estate already, but it also could be ETFs or stock or different ways to invest. And that's kind of how you can diversify your risk as well, or create and generate passive income. That's obviously the rental income that you would have then. I think that might already be filled out by everybody, and we'll see what the results are later. Thank you for filling it out. So let's move forward with why, what, how. What does it mean? So first off, why? Why would you invest? And this is one of the questions that was asked actually. It's important to consider why you want to do this. Is it because you are susceptible for the hype that might be there? So real estate, it's a big thing right now, of course. Also because the stock market might not necessarily do what you expect it to do, or is a bit, it's really kind of fickle. It's hard to grasp sometimes for people. So it's important to know why you want to do that. Also, the timelines are very important. Do you want to create a quick return of your investment? And I see the results are, the majority of everybody has mentioned that they want to generate passive income. After that, build wealth and diversifying your investment portfolio. Thanks for filling it out. Give some insight. So why would you do it? What is your timeline is also important there. And then secondly, what do you want to invest in? Not necessarily only that you want to do it in real estate, but also what property do you want to invest in? Do you have a specific area that you're interested in? So that's important to see what your options are. So if you want to look into the options within the area of Amsterdam, Rotterdam, or Groningen, for instance, those are the largest cities, and that has an impact on what you then would have to consider when investing. Or do you look for more of the suburbs or smaller towns as well? All of that makes a difference. And obviously, how would you like to finance that investment that you want to do? Do you want or need a mortgage? Does it make sense for you to secure a mortgage, or does it make sense to input more or less of your savings to get the result that you're looking for? So these three things are very important to consider when moving forward with consideration of investing in real estate. Now, the financial requirements. What is required? The variables that are taken into account. First off, again, there's a difference between residential and investment mortgage. When you secure the residential mortgage, then you as a person and your income and your savings are kind of the main pillar of securing a mortgage. When it comes to a buy-to-let mortgage or an investment mortgage, the house is kind of the main pillar, because everything has something to do with the house itself. What is the value in rented state? What is the expected rental income? So what is the result of the investment here? This is also something that the bank wants to know, because they essentially also do an investment and they want to know, okay, how does this work with the house that we're financing here? Then the difference between value is when you buy a house in open market, let's say, so anybody can buy it and you can live in the property, then you have a certain value. When you rent out the property, the value of your property drops. To what extent, that's hard to say. That really has to be determined by an appraiser. I usually use a kind of a rule of thumb of around 85 to 90% of the regular value is the value in rented space. I think somebody is not muted. Lilet Schilstra, could you maybe mute? Thank you. Perfect. So there's a difference in value for open market and when it's rented out. That's important to consider. Now, the down payment. Every bank for an investment mortgage will always require you to do a down payment on the mortgage that you have. Again, the residential mortgage you can finance up to 100%. We'll get into that. An investment mortgage, they need you to input a certain down payment to get that done, because the risk is a bit higher for the bank, because you're not the main resident of the property. As Diovana already mentioned as well, if somebody lives in the property, usually they take different care of the property than when you're the owner, right? You have more responsibility there. So that all makes a difference there. That is directly correlated with the loan to value ratio. So how much loan do you take out based on the value of the property? Is that 90%? Is it 80 or 70%? That makes a difference on your interest rate. And of course, input of your personal savings. What is the expected rental income is very important. So what is the result of your investment, basically? And what is your personal financial situation? Because the bank wants to have some security, and they're a bit more strict here because they want to be sure that you can keep paying your own home, then also be able to get the financing done for the investment that you have. And also your landlord or landlady, your investment real estate investor. So you have to take care of the investments of the properties that you own as well. So they want to be sure that it is all financially feasible for you. Again, investment mortgage is not a residential mortgage, and here's a short outline, and this is also something you can look back when you receive the slideshow here as well, which will be shared later on. Residential mortgage, again, you can finance the full 100% of the value of the property. Second, an investment mortgage, that's 70 to 90% of the value of the property, depending on the bank we go with. And secondly, this is a hot topic, the transfer tax. You can see a 2% transfer tax when you buy a house for yourself, when you're going to live in it yourself. This is basically always 2%. There are some exemptions. We can dive into that when that applies to you. But when you buy a property to invest in, then the transfer tax is 10.4%. Now, Very important. It's this is a commonly asked question. It's transfer tax. This is only charged when there's a transfer of ownership. So when you buy a house from the market and you're going to rent it out, or you're not going to use it for your personal residency, then you always have to pay 10.4%. When you already own the property because you live in it, then you want to change that into an investment mortgage so you can rent out your current house. The ownership does not change. There's no transfer of ownership. Therefore, if you change your residential mortgage into an investment mortgage, there's no transfer tax because you're already the owner of the property. Important to know. Now, with the residential mortgage, lastly, you have the regular interest rates, but with the investment mortgage, the interest rates are a bit higher. It's approximately 1 to 1.5% higher interest rates than the regular mortgage rates. So those are the main differences right there. Now, the property requirements, and that's what I'll leave to the lovely people of Expat Letting Network. Lilet, go ahead.
Okay, so property requirements. So before considering a buy to let properties in the Netherlands, be mindful that there's certain requirements and regulations that determines whether you can rent your property out, how much you can charge, and who qualifies as a tenant. To determine this, all municipalities follow a point system, and the point system is awarded based on the size of the property, the WOZ value, the energy efficiency, and the luxury, meaning that having a mixed tap or a bath can add additions to the points, but mainly it's based on it's awarded on size, the WOZ value, and energy efficiency. Now, properties over the 149 points are considered in the private sector, and properties here are unregulated, so therefore there are no price restrictions. If you go to the next slide, housing permits. So in certain cities and areas, the tenant will require a housing permit. This is issued by the municipality. The intention is obviously to regulate the distribution of rental housing in areas where demands exceed supply and protect properties for people with the lower income. So in Eindhoven's properties owned by corporations, tenants need a housing permit. In The Hague, so any rental properties that's 185 points or less, or if the price of the rental property is 1,015.31 cents or less, regardless of points, the tenant requires a housing permit. You will have to apply it by the municipality. And for example, in The Hague, I know that there is an income cap. So to be qualified for a housing permit, I think it's 61,000 for a single person, and then for two, it's 77,000. But again, please do check with the municipality what are the certain qualifications to what you need to get the housing permit. In Amsterdam, it's only for regulated properties up to 808 and 6, or in the case of ground or private agreements that dictates 1068 and 83, you will need a housing permit. Again, it's the tenant's responsibility, but the landlord, it's also the landlord's responsibility to notify them. In terms of the sharing permits, now this is a landlord's responsibility in the Netherlands. So if you want to rent out to property to more than two people, from different households, the landlord will need to apply for a sharing permit. Now it differs from different municipality. Again, checked with each municipality that you're applying from, or you can get in touch with us and we can let you know what the requirements are. And obviously you have to meet the criteria. Your property has to have fire safety, like smoke alarms in certain rooms of the house, communal space over 11 meters square, sound insulation, and each tenant have individual contracts. I'm going to pass you on to my colleague Diovana to talk about the different contract types.
Thank you. Thank you, Lilet. So according to Dutch law, there are three types of rental contracts that you can use to rent your property. Keep mindful that I'm going to talk to a bit later about the contract C, but this is a very special one in case you need to come back to your to travel to another country, but also every situation is different, of course. So what we do, we look at your situation in the Netherlands, and we can together tell you what kind of a contract will suit you better for your property situation, for your personal situation as well. But just for you to have a big understanding of everything, for example, contract A is indefinite contract rental period, which means that the tenant can stay at the property as long as they like. There is a minimum period of 12 months. That means that they have to stay in the property for 12 months minimum, but after that they can stay as long as they want. Normally there is a 1 calendar month as notice, up to 3 months maximum, and minimum for 1 month. But again, keep in mind the tenant can be in the property, can rent out the property as long as they want. The tenant laws in the Netherlands are very strong. They do protect the tenant quite a lot, so be mindful of that as well, in case you need to sell, or you need to you would like to sell your property, or you need to move back to your property. That's something you have to keep in mind. There is also a contract called temporary contract. That's a model B. It's for a maximum period of 24 months. And this type of contract, the tenant don't have a minimum period. So it means that they can leave the property with every month with 1 calendar month notice, of course. Sometimes we might be able to extend to 2 months of notice as well. It might be possible, but most likely it will be 1 month, and they can leave during this period. There's no minimum period for them to stay. There is a maximum of 24 months, and if both party agrees after the 24 months, the contract will become a model A. It will become an indefinite rental period contract, which means that they can be as long as they want in the property. The contract, temporary contract model C is a very interesting one in case you, for example, we had a client one that they did, they wanted to take a sabbatic. They were supposed to be abroad for about a year with their whole family, so they put the house they want to let the property. So this contract is in case you leave the Netherlands, but you are planning to come back. Let's say you got a new assignment in another company or so, or studies or something like that. So you have a date that you will come back to the Netherlands. So this is the contract for you. So you can use this contract because you are going back to your property. So it's we call it temporary contract, but that is a maximum period. Same thing with the 1 month notice if the tenant wants to leave, of course. And it can be extended in case, let's say you are in your sabbatic and you love it that much, you want to stay a year longer, so you can extend a little bit more. But you always have the certainty that you can come back to the property without any problems. Which is different from the model A and B, when the client can actually, or the tenant can actually stay in the property as long as they want to stay. Yeah, if you need more information about it, more specifics about the contract, please send us an email, get in touch. We are very happy to answer all the questions.
Great, very comprehensible and clear information. Thank you both.
Thank you.
And again, this presentation will be shared later on, so if you want to backtrack on this, you can read it. But again, also feel free to schedule a call, of course. Purchase protection law, property purchase protection law. That's a kind of a tongue twister right there, but it's important to know. As of 2 years now, it has been there are some additional laws put in place, and this is mainly to discourage investors on the housing market, and to basically, and this is the main objective, to encourage people that first start on the housing market to find a property on the housing market. What happened the last couple of years is that, especially in, let's say, 2019 to 2021, 2020, a lot of people saw the housing market. Interest rates were ridiculously low. It makes sense that it's not that low anymore. So basically, what happened is that a lot of investors saw, okay, the housing is very interesting. Let's invest in that. So what happened is that if there was a property for, let's say, 350,000 euros, which was kind of the range that a starting family or somebody that wants to got their first or second job, wants to buy a house, there were automatically outbid by any investors. So there are some restrictions now for investors on the housing market. First step there was the transfer tax, and I saw in the chat mentioned if the transfer tax wasn't 8%, it was. Before it was 2%, then it increased to 8% for investors. And now, as of this year, it has increased even more to 10.4% to make it even to have a bigger gap to fill by investors to buy a property. They do this to help first-time home buyers to buy a house. The same thing applies when it comes to the purchase protection law. Now, it doesn't mean that you cannot buy anything. It just means that your investment strategy has to be a bit different. When it comes to the purchase protection law, what this means is then in a couple of countries, and we've written a blog about this, a couple of cities, by the way, and we've written a blog about this where you can see what cities this applies to. There's a restriction to rent out your property. For instance, if we take Amsterdam as an example, right now, if you buy a house with a WZ value of less than 533,000 euros, you're not allowed to rent out your property within the first 4 years of owning the property. So you have to live in the property, be registered there for the first 4 years that you own the property. Just a slight addition here, WZ, the WALS value, that's the value that the municipality gives the property. Usually this value is a bit lower than the actual value of your property. Reason being is the WZ value is based on the average selling price of the year before last. So now the new values, new WZ values are made public, always at the start of the year. And then the termination date is the 1st of January 2022, being the average selling price in 2021. So we saw a slight increase in 2022 in values as well. So that's why the WALS value is usually a bit lower. Why I'm saying this is because when you see the 533 and you see a house on Funda for 533, it doesn't mean that you can automatically rent out a property. So this is something to be mindful of, to know different cities have different requirements here. You can see different values and different considerations. When looking into properties, be sure that you know what's the situation in the area that you're looking to buy. And undoubtedly, Lilet and Diovana can kind of give you some insight in there as well, but that's for the next step. This is important to know. So if you're below this WALS value that you can see right here, you're not allowed to rent out a property. If you already own the property though, so if you bought it before 2020, then that's all good. Then this doesn't apply to you. This really applies for when you bought the house in the last couple of years. Now, taxes. Important topic, not the most fun, but it is something that you should be aware of course. There's a couple of taxes you have to be mindful of. So property tax. This is something that you always have to pay, whether you live in a property, so it's your residency, or you have it as an investment property, you always have to pay a property tax. Kind of depends on what municipality you live, but it's something always has to be considered. Property transfer tax, as a couple of times mentioned now, sort of 10.4% if you buy a house as an investment, 2% if you buy it as a residential property. Now, it might be something that you already know, but there's one addition here. If you buy a new build, then you don't pay transfer tax at all, regardless of it being going to be your own property or it's going to be an investment property. But if it's in a property that has to be built still, it's never been owned by anyone, so you're the first owner, so there's no transfer of ownership, therefore no transfer tax. In an investment mortgage for a property that has to be built still though, it's a bit more complicated because it takes a long time for you to get a result, get a return on your investment. We can dive into that later. Transfer tax, that is. Income tax. Very important. When how it works in the Netherlands, the rental income that you get, in a lot of countries, you have to pay tax over the rental income that you receive over renting out property. In the Netherlands, that's not the case. So you don't pay income tax over the rental income, which is very nice, of course. And capital tax, that will be considered because there are different ways that the tax authorities will tax your income and your capital. Your income is your salary, for instance, and there again the rental income will not be considered, but the capital, so the assets that you have, those will be considered and you will be taxed over. So when you own a property as an investment, it will be considered as an asset that you have to pay tax over. This is different from a residential mortgage because that will not be considered as an asset that you have to pay tax over in that way. Now, you don't have to memorize all of this and you don't have to know exactly how this works right now. It's really dependent on your specific situation, but all of these taxes we'll consider when we give you insight in your financial situation, of course. Then keep to let versus buy to let. As mentioned before, those are two different things. You get to the same kind of mortgage. It's both an investment mortgage, but keep to let and buy to let, there's a difference right there. Buy to let refers to the practice of purchasing property to rent out as an investment. As mentioned, you buy it to rent it out. Keep to let, obviously, is the other thing. You keep it and then rent it out. So that's a property that you already own. You currently live in it, and you then want to refinance it to rent it out to somebody else. You always, if you want to rent out your property, you always have to refinance to a keep to let mortgage if you want to do that for the longer term. If you, for instance, live in the Netherlands right now and your employer sends you abroad for a specific time, then there could be an adjustment. So then you might be able to rent it out for a year or two with the residential mortgage. In any other situation, you have to change it into an investment mortgage, keep to let. Now, I know, I hear this a lot as well. I know a lot of people don't bother with this. A lot of people won't change it to an investment mortgage. They say, well, okay, the bank won't bother. They get their payments anyway, so I'll just keep it as a residential mortgage. There is a risk there. So it's important to know what you're getting yourself into, because that might mean when the bank finds out that they might have to make you sell the house. Now, don't let it get that far. Just if you consider, well, I don't know if I want to keep or sell the property, just get a clear idea of what your situation is, what your options are, and then we can make a better decision with you. So one of the frequent asked questions is if you're planning to move away from the Netherlands, what should you do with the mortgage and your property? Now, this is a joint venture. I'll kick off. On the left side, you'll see the Mr. Mortgage. So the mortgage consideration first, again, was what I mentioned before, get a financial overview, so get an idea of what your options are. Does it make sense to rent it? And can you rent it? Or does it make more sense to sell? Does it make more sense to sell and profit from and benefit from the profit that you make, and then maybe use that as an investment? Different options there. Very important to first get an idea of what the options are there. For this, to know what these options are, you might also need an appraisal. So this is somebody that visits the property to determine what the value is in two scenarios. So when you sell it or when you keep it. So open market and rental value. So then you have a clear idea of what your options are. Included there would also be the expected rental income. So you know, well, this is what my expected profit will be, my expected return on my investment will be. Then, of course, when it does come to that we adjust it to a keep to let mortgage, we'll take care of the whole mortgage application, do all the negotiation and communication with the bank to make sure that everything is taken care of ASAP. Now, that's not the only thing you have to do, because Expat Letting Network will also come into play here. So maybe you can explain a bit about what happens then.
Yeah, so if you have the decision to make a decision that you'd like to rent it out your property, that you have talked to Mr. Mortgage, and everything is okay for that next step. So that's when we come in handy. First, of course, we need to be able to check your property and see what is the possibilities for. If there is any change in need, is that we can tell you what to do, tell you about the price, tell you about location, what kind of tenant should be in the property, what are your expectations regarding that as well. We truly believe that a happy tenant will keep a very nice and happy home as well, to give it back to you. So that's something that we very much care about it. And of course, going through the whole process, since having their house ready to rent it out, and to the time that the check-in is done, and to also the time that the check-out is done, and everything is in a perfect condition.
Very good. Makes sense. Then this is kind of the pillar in the end. What is your return on investment? Because there are essentially two basic reasons why you would have a buy-to-let mortgage or keep-to-let mortgage. Either you keep the property because you have an emotional attachment to it, You just want to keep the property for later on when you might want to move back, or you might want to keep the current property, the current apartment that you have, and later on would like to give it to your children to study, for instance. That's an option. But the most common one is that it actually makes financial sense. So you want to have a return on your investment, ROI. So you want to know that you actually make a profit, because otherwise it doesn't really make a lot of financial sense, of course. So this is something that we'll walk you through. These are two examples. On the left-hand side, the purchase price, 350,000 euros, expected rental income, 1,386. The required funds that you have to input when you buy a house for approximately 315,000 euros is about 100,000 euros. This is including the down payment that you have to do on the mortgage. It includes the 10.4 transfer tax and cost for an appraiser, your financial specialist, Mr. Mortgage, for instance, a notary, and everything combined, really. Then you have two options here. You see two results. Then you have a net return of 4.27% and a cash-on-cash return of 2.76%. This is just an example. Cash-on-cash basically means we'll consider the input of the 100,000 euros that you get, and on the long term, what your result then would be. Net return is more based on the rental income and the mortgage payments that you do. So there are different ways to look into this, and this is basically also important to see, well, hey, how does this combine with a potential investment portfolio that you already have, and how does that fit in? When you already have that, then you can also see, okay, how does this diversify my risk? Does it fit into your strategy that you have on the long term? Now you can see two options, also for a purchase price of 600,000 euros. This is a higher range, of course, more aligned for when you, for instance, want to buy a property to rent out, and you do want to look into the areas that have this purchase protection law, that you might be able, okay, then you buy a house for a bit more expensive, but you are in a more desirable area, so that might mean that your return on your investment could be a bit higher as well. It really depends on the specific property, rental income, and the input of your personal savings, of course. Just two examples right here. Again, this is something that we'll walk you through when you when we look into your specific situation, and of course, when you have a specific property in mind. Now, that's basically what we're everything to know about buy-to-let, investing, and keep-to-let. Let me explain a bit about our pricing, and Expat Letting Network will do that as well. And after that, we'll have some time to discuss frequently asked questions and the Q&A, of course, any chat messages that you put in. So you can already consider, well, hey, maybe I have a couple of questions. Feel free to put them in the chat. And Egle will then later on help us getting everything aligned and answer your questions. So our pricing, a buy-to-let, this means that you buy a house you want to rent out. We have a fixed fee of 2,999 euros. That includes the mortgage advisory, obviously, all the calculations, and a mortgage application as well. Also the guidance through the whole house hunting process. So this means from the moment that we do the financial analysis, where we'll start with, anytime that you want to do a recalculation, your situation has changed, your income, property that you're interested in, maybe you've reconsidered the amount that you want to input of your personal savings. All of that is something that we can then recalculate to see what your situation is there. There's no limit to how many calculations we do, how many calls we do. That's all good. For the financial analysis that we do, that's where we do, where we put in quite a few hours, because we want to be sure, well, this is your option, these are your this is your range. So we have a small down payment to start with, 299 euros. Obviously, that's part of the 3,000 euros fee. That's when you have a buy-to-let. Now, when you have a keep-to-let, you already have a mortgage and you want to refinance that. So we have a slightly decreased fee there. Same down payment of 299 euros to get everything going. And basically, that's as close to a pre-approval you can get. And that's our fixed fee is 2,799. Doesn't matter how long it takes. It doesn't matter how high or how expensive the property is. That's all good. We have a fixed fee right there, and the same service, of course. Now here's the pricing for Expat Letting Network. Now I wouldn't go as far to explain that, so I'll leave that to Diovana.
Thank you, appreciate it. So we have two kind of packages, and at the end they can also become one. So we do have the tenants placement, which means that we're gonna do an intake with you, go through the property and see what the possibilities are, talk about the pricing, about all the changes that need to be done, or maybe they don't need to be done, talk about the whole neighborhood as well, get to know everything about the process and the whole process for you to be able to create, go to the regulations and see if everything is according, regarding the law, if everything is regarding permits and all this kind of things, that if everything is correct to be able to rent the property, of course. Take the photos, listen in all the websites that we know, and also share with our partners. We work with a lot of relocation companies. We are a relocation company ourselves as well, and do the whole promotion, take care of the viewings, screening all the tenants to make sure that they have enough income to pay the rent, of course, that they are inside all the requirements that you have for your own property, and also make sure that all the documentation behind the tenant is also correct, that nothing can go wrong during the process or after the house is rented. Do the checking, make sure that everything is ready for the tenant, that he's also feeling comfortable with the whole process, especially regarding contracts, going through the contract with the tenant as well. We find very important that the tenant knows everything about the contract they are signing, because it can come back to you in a very bad way if they don't. So that's we believe that's very important for all the parties to be happy about that and to understand what they're signing for. Do inspection in the property, of course, together with the tenant, to make sure that everything will be correct for them to move in, but also that will be in the same state as it was when they check out of the property. And after that, we also offer 2-week post support to the tenant and landlords, that to make sure that everything is correct and is done correct in the first weeks of they are living in the property. For that package, we charge 1 month rent. We go through everything together. We make sure that everything is correct and you are comfortable renting a property to the correct person. We also offer property management, that when the two packages can come together, of course, that if you are not interested in deal with the tenant, maybe if you just want to keep the renting coming to your bank account and everything else we can do for you, we can make sure that everything goes smooth during the whole contract time that the tenant has, and make sure that they are well assisted, that we are going to be their connections and that they don't have to go directly to you, to any doubts that they have, to anything that has to be done or fix it or those kind of things in the property. So we take care of that as well. So that's where the property management comes in handy. For that price, for that package, we charge 5% of the rental price that it's in the process, it's in the that the tenant is paying. So yeah, basically we take care of the property as our own property, of course, and we try to make our best that we find the best tenants that will do the same, that they will keep the property as well maintained as possible, that they have all the requirements in the correct way, that all the legal documents are correct to sign and everything is correct, especially when the time comes that they have to move out, that the property is in the same or even better condition than it was when they found the property.
That would be great if it's in better quality than you find.
It would be perfect. It would be perfect.
That's good. Thanks again for the explanation. Very clear. So, a lot of information we've thrown your way. Undoubtedly, there are some questions, and I think this is the perfect time to sound the trumpets and guide in my lovely colleague Egle.
Hi, hello everybody.
There you are.
So I'm gonna go through the questions, but I want to mention that I'm not gonna. I think we don't have time to answer all of them. So if you have any questions, just Robin, if you can go one more slide, feel free to schedule a call. The call is free, no obligations, and then we can answer it personally. So I want to start with a question about, for example, for Robin. So if you buy a property with a mortgage and you need to move away after 1 or 2 years, let's say there is no option that your work gives you a permission to move away. So do I need to change my mortgage type to buy to let? And if I come back after 5-6 years, again, I need to remortgage to residential mortgage. How does that work?
Very good question. Basically, yes. A short and sweet answer. If you, no bank will allow you to rent out your property without their approval. So if you want to rent out your property, and you don't want to refinance it, you have to check if they do allow you to do that. If not, you have to refinance indeed. And if you then later on come back, then indeed you would have to refinance it back. That refinancing back can make a lot of difference, because usually the interest rate on your on a regular mortgage, a residential mortgage, let's say, is a bit lower. So that can definitely be worth the transition back when you move into when you move back to your current house, to your old house. Yeah. So 2 refinances are required then. Yeah.
I also see one of the questions related with the banks, that not all the lenders allow to, not all the lenders have this buy-to-let product, keep-to-let product. This person is asking to share a list of those banks, but could you elaborate a little bit more? So, for example, if your bank does not have this product, keep-to-let product, how does it work?
Yeah, very clear. So more and more banks understand that the market evolves. To give you an idea, so 2022, I think maybe 3, 4, 5 more banks dove into the options to be able to refinance your mortgage. There's a select few that say, okay, sure, you already have your mortgage with us. If you want to refinance to an investment mortgage, you can stay with us, and you have a slight increase in your interest rate, or you have an increase in your interest rate under strict conditions. That's kind of the minority. So basically what happens almost all the time is what you have to do is you have a current interest fixed period. So your interest stays the same. That's a contract that you have with your bank. That means that your bank expects rental income, mortgage income, not rental income, mortgage income from you. So then if you then say, no, I want to change it into an investment mortgage, you can. Then you have to break contract and start a new contract anyway. So then, because you have to change it anyway, then it makes sense to look out for different mortgage lenders. What bank has the best option for you? So in any case, it makes most sense to. It doesn't necessarily have to mean that you stay with the same bank. If anything, the majority of the time, you change your mortgage from bank A to bank B. Even if bank A already has an investment mortgage. So it doesn't really matter if the bank that you currently have your mortgage with, your residential mortgage, doesn't allow, it doesn't have investment mortgages. There are sufficient that do allow investment mortgages to be closed. Not all of them. That is correct. Refinancing will look into the best option. When we have a chat, then we'll also discuss what the different options would be, because it really depends on what your personal situation is, what bank makes the most sense. We work with between the 10 and 15 different lenders that allow investment mortgages. So that's we can dive into when we have a personal call to see what is the best fit for you.
Another question is related. Do you lose when refinancing your residential mortgage to buy to let? Do you lose your tax benefits?
Yes, you do. But what is better explained? What the tax authorities say, you have a tax benefit over the loan, over the interest on the loan on your personal residence. So if you live in a property, then and you have a mortgage on this house, then you have tax benefit over the interest that you pay. This means automatically in investment property, you don't live in it yourself. It's not your personal residence, so therefore you don't have a tax benefit on that. Only on the house that you currently live in yourself. So indeed, there's no tax benefit when renting on a mortgage of an investment property. Yeah.
Thank you. There is another question related with the newly built. So, for example, if someone buys a newly built and then remortgage to buy to let at some point, do we need to pay a transfer tax, or do you buy a property? Do you buy as a residential property and then refinancing to buy to let?
Yeah, so no, that's regardless of it being a newly built. I do understand the idea there, because I mentioned if you buy a new build, you don't pay transfer tax. But again, transfer tax, mind the wording. It's a transfer tax, so it's only when there's a transfer of ownership. If you keep owning the property and you want to change the mortgage, you don't have to pay transfer tax because you're still the owner of the property. You don't sell it to somebody else, you don't sell it to yourself or something. There's no tax way there. So it's you own the property, you keep owning the property, you just change the financing. Therefore, no transfer tax. No.
So now one question, I'm sure you already replied in the chat, but for Expat Letting Network. So if there is no Property Protection Act, still we need to apply for permit from Gemeente?
Oh, I was, because this is so specific, because it depends on obviously the each municipality, and obviously the how many points the property has. So this can differ from different city as well. And obviously, what can't really answer that question without knowing, how many points the property has and where it is. Because like we mentioned, each city has different point system. So yeah, if they schedule a call, we can definitely help them check how many points their property has and what type of permit they need for that specific municipality.
Okay, perfect.
That's and right there. That's also basically in a nutshell what the paperwork and kind of the maze the Netherlands can give you right there. So it's indeed important to know what your situation is. And just let somebody guide you in this maze, because it doesn't have to be that complicated. Just have to know your way around. Yeah. Sorry, Egla, go ahead.
No problem. Also, someone was asking, can we request an update for WOS value? So I believe it's more for Expat Housing Network, this question.
Yes, I think I actually answered that question in the chat already, but yes, you can apply with a municipality to check the WOZ value, and they can do a whole new check and see what the possibilities are, of course. And keep in mind that most of the people will ask to put the WOZ value down and not up, because that's more like what I understood about that question. Because the WOZ value, as Robin said, is about the property taxes. Is the taxes? It's for the municipality to charge the taxes, basically. So the higher the value, more taxes you pay. So most of the people actually call the municipality and do the whole process to put down the WOZ value, so you pay less taxes. But yes, it is possible. You do have to contact your municipality for it.
At this point, I believe there are so many personal questions, I kindly ask everyone to book a call with the Mr. Mortgage team or with the Expat Letting Network, because I think I'm also, I'm done with the questions, and then if not, we will also send like a Q&A with our email. I don't know, Robin, do you have anything else to ask? Maybe one more question was from your side. So how much do you need the savings? For example, if you buy a residential mortgage, a residential property, and let's say you need to invest and buy into that property in percentage.
Yeah.
How much savings do you need to have?
Yeah, so it's not necessarily a percentage. So there are two different scenarios here. On our website, by the way, when you go to mrmortgage.nl, I'll share you I'll share the link in the chat in a minute. So there you can see what basically approximately the closing fees are when buying a residential property. Now, there's a big difference here. It really depends on what property you buy and what the expected value is. But let's say for a property around 350,000 euros, just as an example, the input of your personal savings would have to be around 125,000 euros based on the expected value in the property. But it's not really all that simple that you can just give a percentage, because part of your income and your savings, what you want to input, also makes a big difference there. So it's not really describable in a percentage per se, specifically when you buy a residential property, because then the only percentage that is charged there is the transfer tax being 2%. The remaining fees are usually fixed fees. So that kind of depends on what the situation is. Roughly, because I know you want to get an answer anyway, let's say when you buy a house as a residential property and you do have to pay 2% transfer tax, then the input of personal savings are approximately 5 to 6% when those are the closing fees. When you buy a buy-to-let property, then that percentage goes up. Again, when you buy a house of 350,000 euros, the input is approximately 125. So let's say roughly around 30 to 40% total to cover everything. If the rental income is sufficient to cover the monthly payments, input of your savings is to the bare minimum. So that's basically around the marks that you have to consider what the input would be. Don't base all your calculations and your decisions on this expectation or on this approximation of the percentages. Check in when you want to know what your range is. Approximately check in if you want to know what your range is and what the input of savings would be. So that's the best answer I can give you. About 4 to 5% residential, or 30 to 40% investment.
And also the last question to Expat Letting team, is there any website where you can calculate points, for example, by inputting the size or was value?
Yeah, there is a website that you can go into to calculate the number of points your property has. We can also share that with you, either scheduling a call or I think you're going to send out some information so we can share that link with you as well.
Perfect.
Very good. I did see one of the questions in the chat coming up that might be interesting because it's about the interest rates having increased over the last period of time. Question by David: interest rates have gone up a lot and probably will continue to. My concern is that the refinancing to an investment mortgage at this time is at a higher rate, will turn a profitable property to an unprofitable one. Basically, interest rates have increased. Sure, that's true. And we saw that happening start of basically a year ago. It went up quite a lot in comparison. To give you some insight there, it makes sense that the interest rate increased. We knew that the interest rate of around 1.5 to 2.5% of the years before wouldn't last forever. It's simply the financial market didn't make sense in that way. Just to give you an idea, let's say you pay 2% on your mortgage, but also means that on your savings account, you didn't get anything. If anything, you had to pay to have the bank keep your money, which is the world upside down. So we can see a shift going back there. Now you still don't necessarily get a lot of interest rates on your savings account yet. Banks will take their time to give you money, obviously. But the interest rates have increased to around regular mortgages, fixed for 10 years, around 5% end of last year. Now, what we can see happening, the interest rate increased significantly, and now there's a kind of a balancing. And actually, what we see happening is the interest rates going down a bit. They won't return to the 2% anytime soon. That's not what I expect. I expect the regular interest rate to be around in time over a course of 2 to 3 years when the market cools down, because there's a lot going on in the world right now, considering what's happening in Ukraine and with Russia. Now, also what happens, the terrible things happening in Turkey, all things can have some effects on the financial market, of course. When things are pretty much the same as they are right now, the expectation is that the interest rate will drop actually a bit. We can see that also in the rating that different banks use for the short and longer time. It all indicates that the interest rate might go down a bit. Not too much. I expect 0.23% over a course of a year, maybe. Maybe a bit more if we're lucky, but that's about the range. Now, to answer the question here is how would that impact your refinancing situation? Sure, it can make a difference right there. But this is also why it's important to say, okay, first know what it actually means, that difference in interest rate, before you make a final choice if you go left or right. So if you buy, if you keep, or if you sell. Just be well informed, and then you can make a valid decision, because it might not necessarily be that bad. or at least then you know. So that it makes sense that if it freaks people out a bit that the interest rate has increased, just know that we're in, it has cooled down a bit there as well. And see one other question about a residential property. That's not necessarily the webinar for here, but it's definitely something we're more than happy to explain everything about. Just schedule a call and we'll explain exactly how that works with the transfer tax and so on. Egle, did you see any other questions coming in over the last period now?
No, there was the last question. Someone is wondering how to go around the municipality restrictions to be able to buy to let or buy in a smaller city or anything else.
Yeah,
maybe alternative investment options will be also an option.
Yeah.
Yeah,
well, that's something else, isn't it? That you can just. I would love to say it is possible, but unfortunately, every city has a different law. So you can always try to go around, of course, but there are you always have consequences to it, right? So yeah, no, I would say follow the law. That would be my advice. And if you want to know specifics, please let us know. We can always help you out with that. But yeah, that would be my advice. Follow the law. I'm not sure what you would say, Robbie, but I believe you'd say the same.
Yes, yeah, well, yeah, for sure, and not only because it's recorded, because no, definitely, by all means, it's very important actually, because we have these questions more often. The reason why is, so let's say you do say, okay, now I'll just tell the notary that I'm going to live in it myself, and then it's all good, and then in time I'll just rent it out and they won't know. What happens? If you do that, the bank will catch on in the end, and they will make you revise the mortgage. Now what happens is maybe you close the mortgage for 100%, which you can get with the residential mortgage, and then you have to sell it, but the property value is lower because somebody is living in the property, and maybe they already crossed the border that they have their tenant rights, and you cannot even sell the property for what you have outstanding mortgage for. So that's one thing. The tax authorities will catch on, and you have to pay the difference anyway. So just, if anything, for your own peace of mind, it makes the most sense to see where it makes the most sense to buy a property, following the rules and regulations. It just gives you a lot more peace of mind. But it could need, I see the one part of the other of the question as well, buy in smaller cities. Yes, for instance, look into where, if you want to invest in real estate, let's see where the best option is. Doesn't make it might mean that you want to buy in a bigger city, pay more, because if you exceed that restrictions, then you're not bothered with it, or go to another smaller city where you don't have these restrictions and also have a benefit there. There's a lot of the supply and demand. There's a lot more demand than there's a supply. So what we can see happening anyway is that more people go to the outer skirts of cities anyway. So that gets more popular. Therefore, also renting out properties in those areas could also be more interesting. So broaden your horizon when it comes to looking into renting out properties, if that's your goal. And there are options out there, and maybe we have to broaden our view to other options there as well.
I think, yeah, this is it. And for the rest, we will, you can expect to receive an email from us with the recording and also with some questions answered, if it's not, of course, very specific information. And the last question from also, to get a mortgage from the bank, is it mandatory to have a consent and signature partnership of spouse who lives in another country and have no contribution in buying? So I think it's more like the general, not related with the
when with an investment mortgage, not necessarily. This is basically focused on when you buy a residential property, then you do indeed need consent if your marriage is registered here in the Netherlands as well. Again, there are so many different options here, what your specific situation is. So let's check in what your options are right there. But basically, if you have your spouse in another country and you want to invest in real estate here, you don't necessarily need consent there. No.
That's it, I think. So...
Thanks, Egle, for hosting the Q&A. And Karim, thank you so much for hosting the whole webinar, of course.
My pleasure. Thank you.
Maybe most importantly, all the attendees, thank you for joining. I hope you've learned something today, and if anything comes up, let me know. And last but not least, of course, Lilet and Diovana, thank you for joining me and joining us and sharing
Thank you very much. Thank you very much for having us. Really appreciate it.
Yeah, we really enjoyed it. Thank you.
Thank you so much, everyone.
And looking forward to the next one. Thanks, everybody.
Bye-bye.
Bye.
Bye, everyone. Have a lovely rest of afternoon and day.
Oh, yeah, enjoy the sunshine.
Yes.
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 Yes, indeed.
So rare. So precious.
So rare.
Bye-bye.
Bye.
Everyone. Take care.